5 seconds to the open. Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
All right, friends, welcome to this week's edition of Follow the Money Radio. So grateful to have you along for the ride today. My name is Jerry Robinson. As you just heard, I'm an economist and an author of the book Bankruptcy of Our Nation. And I tell you what, as we take a look at this stock market, we just continue to see the market rising, continuing to rise as we enter into the year 2020. In fact, that's the topic of today's broadcast. The uptrend continues in 2020. Here at Follow the Money, we talk a lot about trends, if you're new to our podcast, in the fact that all markets move either up, down, or sideways, right? There's only three ways they can move. And we have been locked in a major uptrend since 2009 in the U.S. stock market. And it's pretty interesting to see that this uptrend is continuing even into 2020. And of course, we don't argue with trends here at Follow the Money. You know, many people like to try to get ahead of the trend and say it's going to change here, or this is the month that it's going to change, or it won't last past this long. Well, we don't know. I mean, honestly, I've been trading the markets long enough now. And if you've traded the markets or been an investor long enough, you know that there's no way to really know which way the market's going to go tomorrow, let alone where it's going to go next year, right? So we can all forecast, we can all get out our crystal ball, we can all try to figure out what the market's going to do, but it doesn't mean we'll be successful. And when we look at the current uptrend in the S&P 500, for example, which is one of the most, largest indexes in the world, but specifically the one that many global investors and U.S. investors look to when they want to know the health of the overall U.S. stock market, we look at it and we see that uptrend in the S&P 500 has been rock solid without the hint of a meaningful pullback for several weeks, right? So we look back, and I know we have this recent coronavirus that has been, kind of plaguing not only Asia, but it's actually kind of making its way around the world. And we shouldn't take that lightly. First of all, it's a disaster. But second of all, these things can wreak havoc on the market. But when you really take a look at the overall market, we haven't even seen a pullback. I'm looking right now at a chart of the S&P 500 ETF, SPY, and I'm looking at it right now on a daily chart. And we haven't had a touch of the 50-day moving average, which is a typical pullback area that you'll see, a stock or an index, whatever, pull back when it's in a raging uptrend. You'll see it pull back to its 50-day moving average as kind of an area of support. We haven't even seen a touch of the 50-day moving average since last October. So it's been some time since we've even seen a meaningful pullback in this market. And so the uptrend continues as we head into 2020. The Wall Street Journal recently put out an interesting piece talking about how little volatility there has been, especially over the last several months. In fact, I'm quoting you a piece here from the Wall Street Journal. It says the S&P 500 is in one of its longest streaks without a 1% daily move in the past 5 decades. You got to go back 5 decades, 50 years, to see similar things to what we're seeing now as far as the lack of volatility. The article goes on highlighting how the latest leg of the stock market rally has been a gradual climb rather than a euphoric surge. The broad equity gauge has not moved 1% or more in either direction since mid-October, its 6th longest streak since the end of 1969, and 3rd longest since the end of 1995. Now, we go back the last couple of days with this coronavirus this week, and we'll see that we have gotten some swings. But overall, we have really seen a Teflon stock market here, despite all of the things that could be, weighing on the market. I mean, and we got plenty weighing on the market, but we've also got plenty of things propping up this market, right? So in addition to the Trump effect, whatever we want to call President Trump's impact upon the stock market through his words, through his actions, we also have massive ongoing monetary easing by the Federal Reserve, right? We have a relative calming of Mideast tensions and of the U.S.-China trade tensions because we had that phase one trade deal signed not too long ago. And we also have some declining concerns of an imminent recession by many economists now. So for now, it seems as if the market can continue to move higher. Now, as I mentioned, there's plenty of reasons why this market should be due for a pullback. And, we can just think of several of them, some of the same ones that I just mentioned, the massive monetary printing schemes by the global central banks. That has to end at some point, right? We also have stocks trading at all-time highs in many cases amid insane debt levels. We have outrageous debt levels. And in fact, by the way, we're going to be joined by a guest later on today's broadcast. I'm going to be joined by James Dyke. He is a well-known financial advisor. He's part of our Christian Advisor referral. You can always go online to our website, followthemmoney.com/advice. And there you can complete a free online form. We connect you with a faith-based financial advisor who serves your area. And Barry is one of those advisors. He's been with us now for many, many years. A really interesting guy. He's written some interesting books too on this same topic, right? We're going to be talking about more of this topic with Barry. But we have a $1 trillion deficit, according to the CBO, the debt watchdog. We're going to exceed $1 trillion in deficit spending in 2020. And I know that doesn't matter. I know that people don't seem to care about that anymore. Back in 2008, they did. Back whenever their 401ks got cut in half to 201ks, whenever they were fearful about the economy, people, gave a rip about this. But now we have this stock market at new all-time highs, and we also simultaneously have out-of-control deficit spending in Washington. You just don't have a lot of the deficit hawks out there complaining about it, right? There's very little in the way, and we've talked about that ad nauseum, about the Tea Party. Remember the Tea Party? Ain't nowhere to be found. You can't find those people anywhere. They used to invite me to speak, talk about the dastardly economy that President Barack Hussein Obama was driving our economy into the ground with all of his deficit spending, and he was spending too much money, and it was unsustainable. Remember that? Do you remember that? I remember that. I remember that real well, but I also remember that these same people who were worried about that now have zipped their lips shut. Can't find a single person to complain about the deficit. Now, we have $1 trillion annual deficit. Oh, well, the stock market's at new all-time highs, right? So we have this noxious combination of both all of these things that are propping the market up. And then we have, on the other hand, all of these things that in reality should be bringing the stock market down, at least to see a sizable pullback. And we really haven't got any of that. And so at some point we will. Of course, what goes up must come down, and we will see a pullback in this market. But what's nice as trend traders, and those of you who are members here at Follow the Money, we follow trends. What's nice as trend traders is we can really be fairly unemotional and unattached to whatever direction the market is going. If it's going up, well, we have a way to profit from that. If it's going down, then we also have a way to profit from that. But it's not just the stock market, right? You can also be involved in other areas, I wanted to talk in particular on today's podcast, not only about the stock market, which is in a big uptrend, but also some of the different areas that you can invest in. One of the areas that's been really hot since the beginning of the year, surprisingly, has been real estate and utilities, and also technology. So when we go back and we take a look at the first quarter so far, we're just barely 1 month into the very first quarter of 2020. Well, when you look and see what's been working, it's pretty clear. Technology stocks, real estate stocks, and utility stocks have been leading the charge in 2020 so far. And so those are the three areas that we're focused on with our sector ETF rotation strategy: real estate, technology, and utilities. And those have been doing fairly well. Energy's been getting hammered in this environment. Basic materials have also continued to lag, but technology, real estate, REITs, for example, and utilities, because we're really kind of seeing rates fall here and people are looking for yield. And so it's not surprising to see utilities and real estate and things like that really perking up in this environment. Another area that is looking really good right now, in my opinion, is the precious metals space. Precious metals we have been bullish on for a long time, as many of you know. And when I was looking over my charts last weekend, I look at a lot of charts each week, of course, not only for my own trading and for my own investing, but also for our members. And when I was looking through many charts, I just kept seeing over and over again gold and silver just popping out to me. Gold and silver miners, physical gold and silver, and we've been bullish on them for quite some time. In fact, we issued new uptrend alerts to our members on gold and silver both last year, and they remain in uptrends. So gold has been doing well. Silver has lagged a little bit, but it also looks very compelling on the chart. So when you think about all the things we've talked about thus far, we have the Federal Reserve's current insane monetary policies, pumping in hundreds of billions of dollars every single month, and then just acting like they're not doing anything, telling the financial press, don't call this QE. This really isn't QE. We're just pumping in freshly printed money into the U.S. financial system so it won't seize up. But this isn't QE, right? Well, everybody can see through that charade. I mean, right now, the case looks particularly bullish for both gold and silver. And that's where I keep about 15% of my own investable assets, physical precious metals. And I see it as bullish as we head into 2020. You got massive monetary easing by the Fed and by other global central banks. You have this new deadly contagious disease that has no cure, right? The coronavirus. And then you have stocks trading at all-time highs. You have debt levels at insane levels, all-time high levels, consumer debt, business debt, government debt, right? You could hardly spell out a more bullish scenario for precious metals if you tried than what we have here at the beginning of 2020. And there's lots of ways, of course, to trade those markets or actually to invest in those markets. But that's been big. Another area that's been pretty hot has been cryptocurrencies. And I have some charts here I want to talk about real briefly before we head over to our interview with Barry. But I'm looking at some charts right now of cryptocurrencies and some of our favorite cryptocurrencies for the long haul. Things like, of course, like Bitcoin. Bitcoin's back above $9,000 this week as we are kind of back in that area. We were there back in November, early November. So that's been pretty good to see. Watch Bitcoin around the 6,500 to 7,000 area level of support. That's pretty key. Also, Cardano, which is another one of our favorite cryptocurrencies. That one has been breaking out on big volume as of late since we've entered into 2020, rallying almost 100% since the beginning of the year. That's really big. We also added Chainlink, which is another cryptocurrency, to our own personal holdings, and we alerted our members to that back when it was $1.96. It's since risen. That was right at the beginning of the year. It's since risen up to about $2.80. So it's been really rallying strong. Ethereum is also cracking the door of its 200-day moving average now, getting back above it. Big volume here, trading at about 175, above that 160 support. And IOTA has also been on a big run. Many people don't know about that one. That's the Internet of Things, crypto, running from about 15 cents at the beginning of the year all the way up to 30 cents today. So another 100% move here just in the first month of the year, indicating that cryptos might have a real interesting year ahead in 2020. Litecoin is back at its 200-day moving average, trying to break above it. It's really had a nice run since the beginning of the year as well. And Tron is one that we called many, many moons ago. We had issued an alert on it when it was trading for like 0.2 of a penny. It's now trading near 2 cents as we head into the end of January in 2020. So it's been a massive, massive return, but there seems to be more upside ahead in Tron as well. So there's lots of movement here in the cryptocurrency space, and we have a lot to think about as we head into 2020. It's just the first month of the year. We could see a lot of volatility ahead. We haven't seen much volatility. It could be pent up. So we're watching for that. We're noticing that the big sectors, again, are real estate, utilities, and technology. Those seem to be the three areas of the stock market that seem to be doing well. We have this coronavirus that's hanging over us. Is it going to hurt the markets? We don't know. We know that we have to take it seriously because previous deadly, contagious diseases have had a big impact upon the stock market. We have this $1 trillion deficit that we're running nobody cares about. We have the Fed making a decision this week on its latest policy. We don't expect any change there. And there's also a slew of earnings coming out. Boeing having the worst earnings performance in nearly 2 decades, losing money. Lots of interesting stuff there. But we've also had Apple reporting some of its best earnings, having a blowout earnings season for the holiday season. And then we have also, maybe this kind of went underneath the radar. I noticed there wasn't a lot of news about it, but President Trump and Benjamin Netanyahu, the Israeli president, or prime minister, I should say, or is he? I don't know. Is it Benny Gantz or is it Netanyahu? Who knows? They have another election coming up March 2nd. We'll find out who the real who the real prime minister is of Israel sometime, hopefully, maybe in March, maybe not. Maybe we have to have another election. Who knows? But both men were here in Washington yesterday, and they released, the Trump administration unveiled the Mideast peace plan with no Palestinian in the room. No Palestinians were there, and they don't support it. So, where that's going, who knows? It is a very ambitious plan. I spent much of my evening last night poring over the brand new, it's probably like the PDF I downloaded was like 180 pages directly from the White House, but it's probably much less than that if you just kind of focus on the main points. But yeah, I'll have more to say about the Mideast peace plan that's been proposed by Trump. It's a very interesting topic. This has been an area of the world that just cannot seem to make nice, and there's all kinds of reasons for that, of course. But we'll probably visit that topic on a future call because it can have a major impact not only upon the markets, but upon geopolitics. It could be really, really interesting to see what happens with this. So anyway, just kind of running over several things this morning as we move into 2020. The uptrend remains intact. We're still here with a stock market that's at elevated near all-time highs. Sectors that are hot right now, real estate, tech, and utilities. Precious metals look great on the charts right now. I think 2020 could be a great year for them. We'll see. And cryptocurrencies also really just kind of staging a nice rally here at the beginning of the year. Will it continue into 2020? We have our eyes on it. We also have a new cryptocurrency report coming out, an investment report for our members coming out a little later in Q1. So with all that said, we've covered a lot. Let's go ahead and move in now to our interview with Barry James Dyke. Again, he's a financial advisor. He has been with us with our Christian Advisor referral now for several years. Let's get some insights from Barry on what he sees as he looks out at the state of the U.S. economy in 2020. All right, well, joining me on the line today is our good friend, Barry James Dyke. Barry is the president of Castle Asset Management, and he has been a financial advisor for many years. In fact, he has one of his best-selling books, The Pirates of Manhattan, was a very important book in my own life. It really meant a lot to me, and I really appreciate having Barry on the line today, the author of The Pirates of Manhattan, and a member of our Christian Advisor referral. Barry, great to have you on the line today.
Jerry, thank you so much for having me. It's always, I think, the world of your organization, what you're doing, and you have a great message out there, and thank you for having me as your guest.
Well, thank you, Barry. I would say the same about you. You're out there. You've been doing a lot of hard work trying to, help people understand the shenanigans that go on Wall Street. I know you have spent a lot of time researching this topic. Before we talk about some of your latest research, would you briefly describe the book, The Pirates of Manhattan, for those who have never read that book, and maybe why they should?
Okay, yeah. So first of all, folks, you can just go to www.barrymddyke.com, and if you call in or buy a book and you need some help, just let me know you heard from through Jerry, and we'll be happy to help you out. But in any event, so the first book I wrote, The Pirates of Manhattan, it was reinventing myself. It took me about 10 years to research the first book. But I understood why a lot of the financial products which are stuffed into people's retirement accounts don't work. They can't work. They never will work. And but we are essentially, because of a lobbying fiat, if you will, we end up in these things. And so in any event, so I researched this book and explained why I saw problems with credit and derivatives and the whole thing. And I released the book with Nelson Nash in 2007, and May of 2007, I spoke actually in Birmingham, Alabama, and then all of a sudden the the financial collapse came about. So I look like Notre Dame, Jerry, and I'm really not. I'm not God, okay? But I just done a lot of research, and I explained why life insurance and annuities were some of the best things anyone could own. And it was groundbreaking research because up to that date, no one had really documented where these institutions put their money, which is it's a total hypocrisy. But in any event, so that book is now. I've sold my books, Jerry. Thank you, God. Sold my books in 23 countries, over 33,000 copies. This is word of mouth.
Yeah, isn't that fantastic? And the book, the reason why it had such an impact on me was because I had never seen the documentation, as most people had never had, until you released the research that showed that many of these big Wall Street firms and big financial institutions, they push particular products upon the people, but then they actually don't eat their own cooking. In fact, they use things that they tell people that they shouldn't have, like in their own financial plan. So it was really quite eye-opening to me, and I've recommended that book for years, and everyone who's read it has come away with the same thing. So I strongly encourage people to check out that book. Now, you're still doing lots of research. You're still writing books. You've written another book called Guaranteed Income.
Yep.
That's one of your latest books. What are you researching now? What should people know based upon what you've been researching? What can consumers and financial people who are interested in finance, what should they know right now?
Well, I'm actually updating the last guaranteed income, and Dave Walker, who is former Comptroller General of the U.S., so he's a great friend of mine. He's endorsing it. But anyway, so the hypocrisy actually continues, and so what I'm doing on the next guaranteed income, Jerry, I'm essentially going to bring in the Secure Act, which was passed like last month by the Trump administration. But the problem there, it always goes back to debt, Jerry, as you know, and this is. But the hypocrisy continues. So the research, when I finished that book in 2015, I'm going to include all the companies who are de-risking their pension plans, their retirement plans, and it's huge. Again, you won't see this documented in the press, but I get into even how like the New York Times and CBS News and General Motors and BMW and Rolls-Royce and all these major corporations are using life insurance and annuity products to de-risk their pension plans and retirement plans. It's all true. And it's actually kind of started, Jerry, in the UK, but now it's taken hold. And so, but also with the Secure Act, which annuities are going to be part of retirement plans. But again, I would highly recommend that someone go to an independent advisor because the asset managers really have never looked out for the regular old person.
Yeah, the Secure Act is interesting. It does seem to have some good elements in it, and when we take a look at it, for those not familiar, the Secure Act was just passed, or actually signed into law earlier this month by President Trump.
Yeah.
And it was part of the government spending bill, but it's going to have a huge impact on retirement savers. What are some of the good things and bad things from that Secure Act in your mind?
Well, the good things are, okay, Jerry, is that they're going to be pushing out the required minimum distributions up to age 72. So from 70.5 right now, so that's a good thing. That helps a little bit. And also what they're going to be doing is including an annuity option into the plan because one of the only things that works is in annuities and retirement plan. So these are the good things. Conversely, there's going to be no longer any more stretch IRAs. So
yes,
and also too, Jerry, I don't know if you remember this, but when I started researching this stuff 20 years ago. I don't know if you remember this, my friend, but retirement plans and estate plans were taxed as high as 95%. So we're seeing kind of a tax problem with retirement plans as well. But so there's a lot of things going on, and there's a lot of moving parts. But people can go to barrymdike.com or contact CFAN if I can be of service to them.
Absolutely, yeah. If anyone wants to talk to Barry James Dyke, of course you can reach out to him, or you can go right through our website, followthemoney.com/advice. Just complete the online form and let us know you want to talk to Barry, and we'll put you right in touch with Barry. Barry, when people meet with you, what is that experience like? You're a full-blown financial advisor, so you cover everything from soup to from the A to Z, basically, right?
Yeah, and I'm blessed. I'm a fiduciary, so I have to look out for people first, and the blessing of thanks to people like you, but I do a lot of this all around the country. I've never met a lot of people who I feel very, very blessed. So we really look at we treat people's money as if it's our own, and so it's really more about planning and the architecture versus just whether they buy insurance, annuities, or whatever, or securities, or whatever the case may be. We try to tell people the truth. That unfortunately, Jerry, we've been told that you can still get something for nothing in this country, and this still doesn't work.
That's so true. That's so true. Well, and many people, when they meet with you for the first time, should they expect to pay a fee? I mean, do you charge a consultation fee to meet?
No. The first ones are free. We know we can do it over the phone. We can do it over the internet, whatever. We do disclose it. We have a bunch of staff here, and they have to eat too. So we this business is not a high margin business, as you know. It's kind of like picking up nickels in front of a steamroller. But we love what we do. But no, we charge a fee. And we do asset management. It's very, very competitive, and so we just we work on scale, and So the first one's for free, and just to see where people are at, and we just take them there. There's no pressure, whatever. I don't like to be pressured. I don't think people should be pressured either. But as part of the fee too, we also send them 3 of my books, and so hopefully people will take their retirement into their own hands. And this is what my point is that really, unless you're a state or a government or federal employee, you really have to look out for yourself. And the asset managers and the banks, I mean, and the Fed, they're not looking out for the regular old person, Jerry. And it's just what keeps me kind of going on all this stuff is that there's a I think this is Ephesians. Okay, it says it says, for we do not wrestle against flesh and blood, but against powers, against the rulers of darkness of this age, against spiritual hosts of wickedness in heavenly places. That's Ephesians 6:12. But I kind of feel this way, therefore to him who knows to do good and does not do it, to him it is to sin. So God's kind of blessed me with this knowledge. So I'm just trying to get it out there to people, and have some fun and tell them the truth.
Barry, you bring all that up, and I know you're an educator at heart, but you must be looking at this stock market and seeing it stretched at, these new all-time highs, pumped up by a Fed that is just dousing the economy with, hundreds of billions of dollars in freshly printed money, not calling it QE. And we have, as we were talking off the air, the CBO, the government watchdog or debt watchdog, the nonpartisan group, telling us that we have a $1 trillion deficit in store for us this year, 2020. That's their projection. It'll be more than $1 trillion. So, Barry, Washington is taking in $1 trillion or more or less than what it's spending. I mean, by all definitions, we would call that bankrupt. We would call that person wildly reckless if that was a person, if that was an individual. But when it's the U.S. government, somehow they get a pass. What do you think about the stock market at these levels? Does it feel like it's about to break to you? Do you feel like we have much more ahead before this lunacy ends? I mean, how do you view this?
Well, there's no question it's going to be correction. There's no question, and it's only God knows, and I'm not God, okay? And I'm just let's look at the facts, Jerry. Okay, look at the journal, Wall Street Journal, the other week. They released a report. 40% of all the listed stocks are not making money. Okay, 40% of them aren't making any money. We have zombies like GE, which are just a disaster. Let's look at some other facts. More than 50% of the stock market activity has been caused by essentially stock buybacks, which is financial engineering, so executives can be really highly compensated. But who's holding the bag in all this, Jerry? It's not the insiders, and this is why I wrote the Pirates of Manhattan. Is that it's not the insiders, like the retired executive from Boeing or whatever. It's the regular rank and file people who have their money in 401ks. So I recommend any one of your listeners who are over 59 and a half, Jerry, to give us a call because they should I would look to head to for the exits, and I don't. But the problem is, this is the problem, Jerry, is the debt is all high. The auto loan debt is all-time high. Student loan debt is all-time high. Mortgage debt has surpassed what it was in 2008. You look at the facts, they're not too encouraging. Now, that said, we're better off than Europe. But the Federal Reserve essentially, is in bed with the banks, and let's anyone who's read anything, Jerry, the Federal Reserve and the bail out the banks during the financial crisis, not regular old people, and so the thing is, but you really have to look at what's best for you, so that's my point is really to pay attention. Okay, and because there will be another one. And, I've been in this business long enough, Jerry. I remember I was in 87. I remember we couldn't even get anyone on the phone. I remember 99, 2000, where, 75% of the listed stocks in 99, 2000, Jerry, are no longer listed. 75%. And in 2008, 2007, all these people are trapped in these target date mutual funds, which I wrote my second book, A Highway to Serfdom, about. So again, the thing really is that you have to really de-risk what you have. But the irony of the whole thing is say these major companies like Rolls-Royce, BMW, British Airways, FedEx Corporation, Raytheon, CBS, New York Times, are all using annuities and life insurance to de-risk their plans. And
you're talking about the top executives, the executives.
Well, not just that, but the entire retirement plan. They're doing what is called a buyout or a buy-in or or they're selling a longevity insurance, which is insured by a life company. And even like get this one, Jerry. Lehman Brothers bought an annuity to finance their pensions in the UK, and Bank of America Merrill Lynch also bought a $500 million annuity to finance their pension plan for like 519 execs in the UK. So this is all documented. But thank you God for the internet, and so I wouldn't be able to do the research without the internet. But this information is available. I'm just a good collator. I'm not any genius. I just work diligently at this stuff.
You do. You're listening to the voice of Barry James Dyke. We're out of time with our guest today, but it sure has been good to hear his insights. Here we are at the very beginning of 2020. A lot of things in flux, a lot of uncertainty ahead. We know we're standing at new all-time highs or near all-time highs on the stock market, along with debt levels at also all-time highs. So it's a unique combination. Who knows how this year will go, but you do need a financial plan. You do need a financial advisor, and Barry is one who can help you. He's part of our Christian Advisor referral. If you'd like to get a hold of him, of course, you can reach out to him directly, barrymjamesdyke.com, or you can go right to our website, followthemoney.com/advice. Just give us your name and information, and we will put you in touch with Barry. He'll reach out to you and provide you with that free complimentary consultation. Barry, it's been great to have you here on the broadcast. I hope to have you back soon. God bless you, my friend.
Well, God bless you, and thank you for all the work you and your crew do, Jerry. We really need voices like you.
Hello, friends. Jerry Robinson here from Follow the Money Radio. I want to give you an update on my upcoming speaking schedule. Early next month, from February 6th through the 8th, I'm going to be down in sunny Orlando, Florida, speaking at the Orlando Money Show, which is really quite a spectacular educational event to be held at the beautiful Omni Orlando Resort at Champions Gate. This year's Orlando Money Show, which is one of the largest gatherings of Wall Street's most experienced and insightful experts, will be filled with 3 days of live presentations, investing workshops, and spirited panel discussions. I've been invited to speak on a variety of investing and trading topics this year, and I will also be doing a book signing at this event. I will also be joined by over 125 well-known economists, top-performing money managers, and successful professional traders. Some of the other speakers at this year's event include Steve Forbes, Peter Schiff, Rick Rule, and many, many others. And the best part is that this 3-day investing education event is absolutely free. Reserve your free seat by going online right now to followthemoney.com/Orlando. The seat is free, the education is free. It's just simply up to you. Reserve your free seat now by going online again to followthemoney.com/Orlando. And I'll look forward to seeing you next month. Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, friends, welcome back to Follow the Money Radio. We are online at followthemoney.com. You'll find all kinds of great resources there, videos, archived podcasts. We even have a Stock Trading University podcast. If you've never listened to that before, very popular one. You can find all of that at followthemoney.com. To spend some time there looking around, you'll find lots of hidden gems and lots of great content there for you if you want to spend some time on followthemoney.com. Well, as you've heard on today's podcast, we've covered a whole lot. We've talked about stock market uptrend. We've talked about what sectors are hot. We talked about our view on precious metals and cryptocurrencies. We also talked with James Dyke. And again, I want to stress, if you want to talk to a trusted financial advisor, someone who comes at the financial planning process from a faith-based perspective, I would encourage you to go to our website, followthemoney.com/advice. Well over 10 years ago, I created the Christian Advisor Referral. And in essence, it is a group of Christian financial advisors, faith-based advisors who have lots of experience. And it's a great place, I think, to start when you're looking for a financial advisor. So if you'd like to reach out to one of our advisors, just go to followthemoney.com/advice, and we will get someone in touch with you as soon as possible. You can also call us at 800-609-5530 and let us know you'd like to be put in touch with a Christian financial advisor from our team. Well, you might have recalled James Dyke quoting Ephesians chapter 6, verse 12, and that's our final word. You know, I like to leave you with a final word each time we do our podcast. Let's read together Ephesians chapter 6, verse 12, where it reads, "For we do not wrestle against flesh and blood, but against principalities, against powers, against the rulers of the darkness of this age, against spiritual hosts of wickedness in the heavenly places." When we are Christians, when we believe the Word of God, when we follow Christ, we know that our enemies are not flesh and blood. Right? We have real spiritual enemies as believers, as Christian believers. It's important to keep that in mind. I think that's a very good reminder by James Dyke, and I want to leave it with you. Just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of ftmdaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.